What is up, everyone? Welcome to Crypto Blessing. We're still giving away $50 in Bitcoin. All you have to do is follow us on Twitter. Our Twitter handle is @BlessingCrypto. Retweet and follow, tag a friend, and make sure to comment below letting us know that you have entered. If you're still waiting for video game evolution videos, I highly recommend you check out our Think of Ideas Worth Sharing video from yesterday. It goes over why we have rebranded this platform and why we are looking into the future of cryptocurrency. The markets are down. There's no doubt it's been a bearish few months, almost 6 months of bearish activity. And for those that are new to investing, bear markets are showing downward momentum and bull markets are when they are going up. It's very simple, black and white stuff, although nothing in investing is black and white. There's no doubt that technology has changed the landscape of investing. If you have extra money and you're looking to make that money work for you, or as some have also done in the past, you're really needing that money to work for you and taking a risk that may or may not pay off. Financial technology, like blockchain, is an emerging market that is incredibly disruptive to traditional sectors, and thus the growth has been slow. But just like I outlined in yesterday's video, the enthusiastic cryptocurrency investor really believes that they are part of something that is going to become huge. This space is only known by a small percentage of the world's population, and those of us that are in and enthusiastic about it do feel that we have the next Facebook or Amazon. There's a lot of discussion as to whether or not cryptocurrency is going to usher in a new evolution of financial technology, as well as empowering the people, taking the power out of the bank's hands and putting it into the people's via peer-to-peer distributed ledger technology. Bitcoin was the first, Ethereum is the second, now we are well into the third and fourth generation of blockchain technology, that being industry-specific solutions to chronic and widespread problems, providing more efficiency and, of most importance, transparency to an otherwise untransparent market. There are many types of investments, all with their own amount of risk. Investing styles and different strategies to try to make a small amount of money, or in some cases a larger amount of money, work for you, producing a return on investment, or ROI. Today, I am going to go over all of the different types of investments, their associated risk, and how cryptocurrency fits in or maybe doesn't fit into any of the traditional investment options. There are stocks, mutual funds, bonds, closed-end mutual funds, real estate, and various alternative investments. And owning all or part of a business are just a few examples. Buying shares of stock gives the buyer opportunity to participate in a company's success via increases in the stock price and dividends, which is a percentage of the earnings paid out on a schedule. Shareholders have a claim on the company's assets in the event of a liquidation, but do not own the assets. Holders of common stock have voting rights at shareholders' meetings and the right to receive dividends if they are declared. Holders of preferred stocks don't have voting rights but do receive preference in terms of the payment of any dividends over common shareholders. They also have a higher claim on company assets than holders of common stock. If you were an early investor in either Amazon, Facebook, Instagram, or Snapchat, along with Twitter and a handful of others, you would be doing incredibly well. Warren Buffett's Berkshire Hathaway is almost $300,000 for one share in the company. It wasn't always that expensive, and therefore there's a ton of money that was made on the way up. Stocks can be considered pretty high risk depending on which company you go for. There are different risk profiles that you must take. You can invest in the S&P 500, which is a list of the top 500 companies, or the Dow 30, which is a list of the 30 top companies in the Dow Jones Industrial Average. Next up, we have bonds, which are debt instruments, whereby an investor effectively is loaning money to a company or agency in exchange for periodic interest payments, plus the return of the bond's face amount when the bond matures. It's essentially a locked-in amount of money that are issued by corporations, the federal government, plus many states, municipalities, and governmental agencies. A typical corporate bond might have a face value of $1,000 and pay interest semi-annually. Interest on these bonds are fully taxable, but interest on municipal bonds is exempt from federal taxes and may be exempt from state taxes for residents of the issuing state. This is in the United States of America. Bonds can be purchased as new offerings or on the secondary market. Just like stocks, a bond's value can rise and fall based on a number of factors, the most important being the direction of the interest rates. Bond prices move inversely with the direction of those interest rates, and it's a much more safer investment long term. Mutual funds is a pooled investment vehicle managed by an investment manager that allows investors to have their money invested in stocks, bonds, or other investment vehicles as stated in the fund's prospectus. A mutual fund is valued at the end of trading day, and any transactions to buy or sell shares are executed after the market close as well. Mutual funds can passively track stock or bond market indexes such as the S&P 500, the Barclays Aggregate Bond Index, and many others. Other mutual funds are actively managed, where the manager actively selects the stocks, bonds, or other investment instruments held by the fund. Actively managed mutual funds are generally more costly to own because it requires a lot of work on the broker, and only accredited financial advisors are able to participate in the mutual funds market. You can get dividends, interest, and capital gains, all of which are taxable in a non-retirement account. Selling a mutual fund can result in gain or loss on the investment, just as with individual stocks or bonds. Mutual funds allow for small investors to instantly buy diversified exposure to a number of investment holdings within the fund's investment objective. For instance, a foreign stock mutual might hold 50 or 100 more different foreign stocks in the portfolio. An initial investment as low as $1,000 or less in some cases might allow an investor to own all of the underlying holdings of the fund. Mutual funds are a great way for investors, large and small, to achieve a level of instant diversification. ETFs, or exchange-traded funds, are like mutual funds in many respects, but are traded on the stock exchange during the trading day, just like shares of stock. Unlike mutual funds, which are valued at the end of each trading day, ETFs are valued constantly while the markets are open. Many of them track passive market indexes like the S&P 500, the Barclays Aggregate Bond, and the Russell 2000 index of small cap stocks, and many others. Actively managed ETFs have come into being and have so-called smart beta ETFs, which create indexes based on factors such as quality, low volatility, and momentum, which is a recent technological advancement in ETFs. There are many other ways to invest outside of stocks, bonds, mutual funds, and ETFs. Real estate is one that is notoriously good for appreciating over time. You can buy commercial or residential property directly, and there are real estate investment trusts that pool investors' money and purchase properties. REITs are traded like stocks, which is real estate investment trust. There are mutual funds and ETFs that invest in real estate investment trusts as well. Hedge funds and private equity also fall into the category of alternative investments, although they are only open to those who meet the income and net worth requirements of being an accredited investor. Hedge funds may also invest almost and may hold up better than the conventional investment vehicles in turbulent markets. Private equity is another way, and that allows companies to raise capital without going public. There are also private real estate funds that offer shares to investors in a pool of properties. Often alternatives have restrictions in terms of how often investors can access their money. In recent years, alternative strategies have been introduced into mutual fund and ETF formats, allowing for lower minimum investment and a great liquidity for investors. These vehicles are known as liquid alternatives. Understanding the different investment vehicles and assessing your own personal risk profile is a way for you to determine what kind of investments you should be making. Everybody must be thinking about their own retirement and their own lifestyle needs. Obviously, money is great, and as I indicated yesterday, stopping and thinking about your own financial future and what investment options are available to you is a great way to not be confused when the time comes that you have some extra money, or heaven forbid you need some extra money to satisfy some sort of personal or family emergency. If you invest some of the money you've earned in your lifetime, and as long as you're aware of what types of investments you have and how often you can gain access to those funds, it can really come in handy. All of the different investment vehicles that I just outlined are all investment vehicles in traditional markets that all use fiat currency. Cryptocurrency is a completely new financial technology that relies on a distributed consensus algorithm to ensure transparency, whereas the record of all transactions are kept by everybody that participates in the network. It is not subject to centralized control, and therefore all of the corruption that is associated with that immense amount of power. And this channel is all about blockchain technology and the innovations that are being made available to the everyday user, especially those that don't participate in traditional banking. Banking the unbanked is a slogan for cryptocurrency that offers services that would otherwise not be available to people that don't have any money to invest or don't even have a bank account. And in the past, there have been people rewarded for cluing in and being aware that Facebook might be the next big thing or Twitter might be the next big thing. Amazon and eBay, these e-commerce giants, weren't always that way. At one point, they were a very small market, just like cryptocurrency. And everybody on the outside looking in said that they were probably crazy, this will never take off, etc., etc. And now look at them laughing all the way to the bank, while everybody else struggles to keep up. There is only a small percentage of the world population that are aware of this, and even a smaller percentage of those that think it is the next big thing that could really take off. There are already a number of assets in the top 100 that if you invested $1,000 into last year, you'd be well into the 6 and sometimes 7 figures. There are so many reasons why now is the best time for you to invest in cryptocurrencies. And no, you are not too late. It is never going to be too late to recognize something that is of utmost importance going forward. The number one reason why you should invest in cryptocurrency is returns like you could have never imagined. Let's just compare Bitcoin's rate of return with the S&P 500 stocks, which is the leading indicator of the performances of U.S. equities from the year 2016, indicated by the blue line, which is mostly horizontal, whereas the orange line is Bitcoin, seeing a 500% return versus a 20% horizontal return. I wish I could say that we're dreaming, but we're not. Say you invested $10,000 in early 2016 in US stocks, by now you'd be around $12,000. But if you invested in Bitcoin, you'd be worth a whopping $60K. Let's choose another prominent coin, Ethereum. With the S&P 500 return of $900, Ethereum saw a 4,600% jump, which is an even crazier number. This chart is from the start of this year. If you invested in Ethereum, your investment would have increased by a multiple of 46. If you had invested $10K, you'd have almost $500,000 in 6 months. Think about it. These kinds of returns are impossible to acquire within the realm of traditional investments. Although Bitcoin and Ethereum are the biggest coins right now, there are so many other examples, like Nano, formerly known as Rayblock's XRB. If you put $1,000 into their ICO before they went public, it'd be worth into the 7 figures now. Aside from the already huge growth that the markets have seen, the crypto world is poised to double, triple, or quadruple in size in just the next 12 to 24 months. The use of technical computing terms can confuse and deter outsiders, and cryptocurrency can be extremely intimidating. This is the main reason why many stay away from crypto. But you can follow us here at Crypto Blessing along with doing your own research to keep yourself on pace and up to date with the evolving changes. And as I say, if you blink, you might miss something. Lastly, and in my opinion, the most important reason, and the reason why we started this journey here at Crypto Blessing on YouTube, is to share our ideological empowerment that we do feel by investing in these markets. Not only are we on to something really great, and we are fighting the good fight against corruption and oppression, and aside from the opportunity to make a ton of financial gain, if you're not a big fan of the government, the big banks, or monopolistic corporations, then crypto is perfect for you. Humans are used to a central authority in the form of government, institution, or any authority that set rules and dictate the way things should be done. What if the tables were turned and the masses have a real say in how things should operate? Now that is a truly democratic ecosystem. The decentralization that is inherent with blockchain technology democratizes traditional powers and empowers the masses, No more shall you depend on financial institutions for transferring money that comes with an exorbitant fee. There are many assets, most notably Bitcoin, that allows users to transfer money to anyone at any location for a fraction of the cost, and requiring very little time at that. Instead of waiting days for bank transfers and getting eaten up by fees, you can have private wallets that store your coins and give you full control of your money, like managing your own bank. The nature of a decentralized economy that's powered by blockchain naturally aligns the economic incentives for participants. That means that actors with bad intentions would find it extremely unproductive and expensive to attack or compromise the system, based on the proof of work and the hybridized consensus algorithms that make hacking or cheating a system just far too expensive. It's a genius way of reducing attacks, and so far Bitcoin has been functioning for 99.9% of the time and has yet to be hacked. Through the process called mining, by confirming transactions on the network, you are entitled to an economic reward. Anyone can take part in the network by contributing resources and earn coins for the work that you end up putting in, most of which is all automated, and all you have to is click go on whatever mining program you are using, and it allows any person to participate and power the entire system. As is such with the nature of decentralization, we really are fighting the good fight, and we are on to something incredibly big. Financial technology has evolved into what blockchain is today, and although the market cap is low, and although we've been bearish for a while, every action has an equal and opposite reaction, and every significant bear market is followed up by a bull run. Many are saying the likes of which we have yet to see. John McAfee says Bitcoin's going to go from 6,500 to 15,000 in just the next month and a half, and we will be here reporting on all of the evolving changes as they happen. Smash that like button and subscribe. Click the white bell notification button so you don't miss out on any of our content. And follow us on Twitter to enter yourself into our $50 Bitcoin giveaway. Continue to follow us as this market continues to emerge and disrupt every traditional sector that it is planning to be applied to, with more assets always coming onto the market, a bunch of very exciting new ICOs, and with Binance Coin doing so well. Despite the bear market, it's a very exciting end of the summer, and I welcome you to the Crypto Blessing family if you are new here, and for those of you that have been following us, I thank you once again for watching this video. I hope that gave everybody a little more of an understanding of what cryptocurrency is, how risky it really is, and why the enthusiasts are so diehard. And if you don't think cryptocurrency is going to take off like us enthusiasts do, I welcome all of your academic banter. Comment below and let me know why you don't think this market is going to go where it is. And I'd love to start an open discussion in the comments about the future ideology of financial technology and where you see money evolving into the 22nd century. Thank you once again for watching Crypto Blessing, and I will see everyone tomorrow.